Hello, traders, investors, and everyone watching. I'm Ali Dailami representing Alpho, and in this video, we'll take a look at the Chinese electric vehicle industry and the performance of its market leaders. Now, before we get into the video, make sure to like and subscribe so you can always be up to date with the latest revelations of the financial market and to get the latest insights on the world's most successful stocks. So, let's get into the video by first portraying how popular electric vehicles are on a global scale. Most nations around the world have adopted modern cars in the contemporary era. As batteries have become stronger, performance of electric cars have surged over the years thanks to research and development, and they have become much cheaper to produce compared to the old days. This is why, according to the World Economic Forum, 1 in 100 cars on a global scale are electric. But what are the types of electric vehicles? First, battery electric vehicles or BEVs are vehicles powered entirely by electricity. HEVs or hybrid electric vehicles run on electricity and fuel simultaneously, while PHEVs or plug-in hybrids run on electricity until the battery is nearly depleted, to then consequently run on the internal combustion engine to power the vehicle. Now, I'm sure you heard about Tesla and its popular cars, alongside other automotive giants such as BMW and Volkswagen, also innovating electric cars. But one growing market is that of the Chinese electric vehicle market. The most popular companies would be NIO, XPeng, and Li Auto. NIO, also deemed as the Chinese Tesla, was founded in 2014 and is quite popular among foreign investors. The company has witnessed high demand for its electric cars and SUVs in recent times. NIO takes pride in innovating EV batteries so it doesn't depend on EV battery manufacturers to supply its cars with the much sought after batteries. Also, NIO has exclusive services for its drivers. This includes battery swapping services, and if you buy one of its cars, you get access to a fleet of rescue vans with built in chargers. No wonder why the company enjoys an impressively high utilization rate, more than doubling its sales in 2020. On to Xpeng, the smart connected car. The technology and innovation oriented company was founded in 2015, which had a quite successful IPO or initial public offering on the 7th of July 2021, selling over 100 million shares at $15 each, raising about $1.5 billion. Xpeng truly stresses the importance of promoting its cars as intelligent and connected vehicles. In essence, they are redefining the automobile as a giant smart mobile device rather than simply a means of transportation. Xpeng focuses a lot of its efforts towards research and development, solely for the purpose of leveraging the user centered technology. This includes features such as having a self driving ability, multi sensor suite consisting of cameras, radars, and ultrasonic sensors to achieve maximum safety for its drivers. Not only that, but Xpeng differs from other EV giants by focusing on comfort rather than performance, with a softer ride and plush interiors that are better suited to Chinese driving conditions and environment. Last but not least, Li Auto, the new one. Although the company was established in 2015 as well, and in a little over a year, the company emerged from nowhere to become in July of this year the best selling startup in the field. The automotive firm focuses on one car only, conveniently named One, which is an extended range electric vehicle or EREV. Essentially, this is a series of PHEVs or plug-in hybrids where a petrol engine acts as a generator. While the company witnessed a strong success the past few months, it still aims to break the 10,000 cars sold a month barrier in efforts to share the stage with major successful electric vehicle leaders. Comparing the market capitalization of the companies, it's quite clear that NEO steals the spotlight, currently valued at $63.7 billion. dollars. Xpeng is valued at $37.3 billion, dollars, jumping 115% in 1 year, and Li Auto is valued at $33.35 billion, dollars, escalating 75% since last year. But when looking at the sales revenue of the companies, Li Auto surpasses Xpeng in both quarters of this year, which present the company as quite the successful one. If it keeps on this track, it can potentially generate more revenue than the current leader, which is NEO. Let's dive into some analysis, starting with NEO. From a technical perspective, the long term trend is quite neutral, but the short term is quite positive. This is a sign that the NEO stock is being more appreciated by traders and investors, evident in its 9.9% rise the past month. Onto the fundamentals and beginning with profitability, NEO's return on assets is negative 5.6%, which is worse than the rest of the industry. Regarding valuation, NEO is valued quite expensively with a price to book value of 14.95. Also, NEO is expected to report negative earnings next quarter, which feeds into this low valuation. Despite that, the company is exhibiting very strong growth. Their earnings per share have grown by an impressive 30.3% over the past year, with its revenue growing over 200% since 2020. Lastly, NEO is financially healthy with a current ratio of 2.48, indicating that it has no problem in meeting its short term obligations. Let's check out the analysis for Xpeng. Looking at its technicals, the company is doing exceptionally well the past 12 months and is looking quite solid in the short and long terms. In fact, Xpeng outperforms 88% of 26 stocks in the same industry regarding its technicals. Onto the fundamental analysis, Xpeng has a profit margin of negative 28.48%, which is worse than the figure of the rest of the industry of positive 5.14%. The company is also overvalued, just like NEO, trading at 3.17 times its book value. Yet, the company is showing solid and consistent growth, with its revenue growing 161% since last year and earnings per share jumping 50%. This is a very good sign that the company is yet to grow even further. Lastly, the company is financially healthy with a current ratio of 3.87. This is better than 66% of stocks in the same industry. Finally, we'll take a look at the analysis of the highly anticipated Li Auto. Li has been growing exceptionally well the past year, with its stock price surging 75.5% in a span of 1 year. For Li, both short and long term trends look promising. Now, regarding its fundamentals, its profit margin is negative 1.60%. This is negative, but still better than that of NEO and Xpeng. So, despite this, the company is expected to start making profits in the next years. Just like its competitors, however, the company is overvalued, trading at 3.17 its book value. It only outperforms 22% of competition in the valuation aspect. Li, however, has exhibited strong growth not only the past year but since establishment. Their revenue rocketed 3,360% just the past year, with earnings per share growing 93% since last year. Although the company is quite healthy with no issues meeting its short term obligations, there is room for improvement. Taking all of this into consideration, it can be seen that Lee is quite the attractive stock with a lot of potential. Looking into the global electric vehicle market, it is expected to grow from $121 billion to $236 billion by 2027, expecting there to be up to 250 new BEV and PHEV models, around 130 million EVs on the road by 2030, amid growing environmental concerns and more players entering this market. Companies, however, should consider that the market is quickly getting saturated and must provide exclusive features and selling points for them to come out on top and popularize its offerings and brand name. Over 100 countries joined an alliance aiming for net zero emissions by 2050, setting targets to end global warming contributions. Looking into China's national commitments, it aims to account 70% of new car sales by 2030 to be fully electric, while aiming to achieve net zero carbon emissions by 2060. This is because there is rising popularity for electric vehicles and going green, not only for businesses but for individuals and the general population. Now, to note down some general recommendations, it would be wise to avoid NEO in the short term, but to keep an eye for its recovery and potential future rallies. Another option is to capitalize on the fresh, significant bullish rallies of XPeng and Li Auto, as they are deemed as quite promising stocks for investors and traders around the world, not only in China. Make sure to explore other options in the EV world, keeping up to date with the industry as a whole. Now, many changes are happening in this industry, from performance improvement to new technologies and features introduced. Keeping up to date will provide a clearer picture for future forecasts and what we can expect in the years to come. I hope you enjoyed the video, and I thank you all for joining me today in exploring the deep world of the Chinese electric vehicle industry and what we can expect in the future. If you enjoyed the content, make sure to leave a like and subscribe to Alpho to get insights into exclusive information which drives the financial world. This has been Ali Dailami, Chief Analyst of Alpho, and I hope to see you in the next video.